Okay, hey Bilal. So the first theme of your 25 lessons is the nature of finance. And the one thing that you always ask your podcast guests is the origin story and was it inevitable if they'd always end up in finance. So I guess it's your turn to finally answer that. And, starting your career in 1997 at JP Morgan, was that always inevitable or did it happen by chance?
Well, it was not inevitable. I mean, first of all, my background was such that I grew up in a working class family in Oxford, but not the nice part of Oxford, the less nice part of Oxford. And so growing up, I didn't really have any sense of the finance industry. What I did know is I wanted to go to a good university. I did love economics as a student. So I knew I liked economics as a subject to do at university, which I ended up doing. But I had no sense of what careers would you could do as someone who studied economics. So when I got to university, I found out that typically people who are doing economics would do accounting or consulting or investment banking. And of the three, I didn't really know which one I'd want to go for. So what ended up happening is that in my second year of university, everyone starts to apply for internships. And so I applied to a whole range of internships across accounting, consulting, and banking. And strangely, consulting and counting firms all rejected me. But JP Morgan accepted me as an intern. So in that sense, it was an accident that I ended up in finance. It was by chance that JP Morgan gave me an internship role. And then through that internship, I ended up getting a graduate job offer. And then that was the beginning of my finance career.
Sounds great. Um, I guess the next piece, just going into your sort of junior career and the start of your careers, what would be the one piece of advice that, looking back now, what would you give? What would be the piece of advice you'd give junior Bilal?
That's a good question. I mean, there's probably lots of different things I'd say, but the most important thing overall would be to be very open minded and always be willing to learn. And I think that there's a tendency when you're younger to almost try to find your area and stick to it. But it's almost like the other way around. You always have to be in a role where you're not comfortable. You're always having to learn. You're always pushing yourself. So I think that's really, really important. The other thing I would also say to a younger version of myself, and I did actually follow this advice, is to find a very good manager or mentor who you report into. That makes a huge, huge difference. And I was very fortunate to have a very good manager. And that was more by luck than anything else. But if I rewound the clock, I would have, rather than trying to pick the sexiest area of finance,
Mm.
which is what most graduates tend to do, I'd almost pick which manager is a good manager who tends to grow their graduates and interns, who allows them to grow, who encourages them, and sort of pick the manager rather than the product.
Yeah, I think that's very good advice because, a nice manager and a manager that cares about you will allow you to delve into different aspects and explore different parts of the bank as opposed to someone super strict and rigid.
Yeah,
So
absolutely. Yeah.
I think that's great. Another piece of advice that you give, which I mean, I think is pretty great, is that you say that no one can always beat the market. So was there a time that, the market kind of destroyed you or really give you a kick in? And can you share that?
Yeah, yeah. It happens a lot. It happens almost every year. And one of the things I would say is that at any point in time, it always feels like today is the hardest market. And you look back thinking there was a time earlier that markets were easier. And that's not the case. Every single year I've been in finance, 97, when the emerging market crisis, Asia crisis happened, 98, LTCM. Every year thereafter, every year has been really, really difficult. And I've had some good calls, some bad calls. Some bad calls I've had. So, for example, in the 2000s, when the dollar was doing very well in the 90s, I really thought the dollar would continue to do well in the 2000s. And when I thought that, that was pretty much the top in the dollar, and the dollar just descended thereafter. And part of that was to do with the technology story that was going on. So in the 1990s, I had dot-com craze, and it
Yeah.
really did feel like, the US had invented this new productivity machine of tech, Silicon Valley. So it seemed like the US would dominate everybody.
Mhm.
Instead, what happened was you had the dot-com bust, and then you had the rise of China, which really grew over the 2000s. And so that was a huge mistake that I made around that time. And the lesson I'd learned there was one is of humility, that you could have the best arguments. And this is often an issue for people who are very intellectual, that you're kind of almost too smart for yourself.
Mhm.
You can always like argue your side so well that you convince yourself that that's the only way the market could unfold. But the reality is the market is smarter than you, and and the market's almost there to humble you. So
Mhm.
every time you think you've really worked it out, the market moves in a way to make you wrong.
Yeah.
And so in that sense, you need to have a humility and the recognition that your intellectual prowess isn't enough to unlock or solve the market. The market is always unknowable at some level,
Yeah.
and it will always find a way of humbling you.
Also, I think it kind of gets you just at the right time when you think you've kind of like peaked and you're incredibly intelligent in this subject. It will come in and just knock you down just right at the right time. So something quite philosophical there.
Yeah.
Your sort of final lesson, well, the final lesson in the nature of finance is to delink your self-worth from the allure of money. But you also kind of very much understand that is the focus and the product of our industry. So why do you think it's so important to kind of manage to keep the two things a little bit separate and not be so all-encompassing on the finance and the fiscal side of things?
Yeah, I mean, I would say the financial industry is unique in the sense that the product is money itself. Every other industry, money is a secondary thing. You have fancy cars, technology companies, the tech is the primary product, and the money is the revenue that you use to make the company successful. But finance is the industry where money is the product. And so you're surrounded by money, so I started off in foreign exchange, and then I done other markets, equities, and so on. But foreign exchange is an interesting market because it's the largest market in the world. $6 trillion is traded every day. So when you're on a trading floor in foreign exchange, it's not unusual for somebody to trade $100 million or $200 million or $1 billion. That's not unusual. And so when you start to hear that every day, then you lose sense of proportion. You say, we traded $100 million or $200 million of that. And then you look at my salary, it's $50,000 or $100,000, even if it's $1 million, it's just the numbers don't match up.
Yeah.
And so you're surrounded by money and it's your product. So you can't escape it if you're in finance. It's everywhere you turn. It's on your screens and everything. So what ends up happening is the money always primes you. You start to become very focused on money wherever you look. You start to look at everything around you in the terms of money. You meet somebody and you're trying to work out what's their salary or something that, you try to put monetary value on everything. You go to someone's house, okay, how much the house worth, and everything becomes about money one way or the other, whether you're conscious or unconscious around that all. So on the one hand, you have to recognize that money is your product. So you can't escape it and recognize there's, a role for that. At the same time, you have to try to see it as a product and not as the end. It's a means to an end. At the same time, you have to recognize that throughout history, there's always this recognition from, ancient wise people, Plato, Socrates, to all the religious figures, Jesus, Muhammad, and so on, who all talk about the evils of money one way or the other, because it links into greed and avarice and all these other sorts of things. And so you have to recognize that money is part of your basis desires. And it makes you do things, it makes you prioritize things that should be prioritized. It makes you compromise your values often, to get more money or not. It breaks up families often, breaks up marriages. There's something very powerful about money. So you have to really understand, how is it affecting you? Is it that when you leave work after a day on the trading floor that you still, think about money, or you value everybody in monetary terms? If that's the case, you need to take measures to stop that from happening.
Nah, it's a great answer. And then one thing I wanted to just pick up, you said you kind of grew up in a very working class, kind of the dodgier side of Oxford, but you said economics had always interested you. How did you get introduced to economics then? Because it sounds that background wasn't necessarily conducive to, being exposed to like economics and the kind of the further studies.
Yeah. I mean, the one thing I would say is that, number one, I come from an Asian immigrant background. So my parents are originally from Pakistan. They came over to the UK in the 60s, and they moved to Oxford, Cowley in Oxford, where I grew up. Cowley was an area where you had Cowley and Blackwood Leys in Oxford is kind of the other side of Oxford. People know about the Dreamy Spires University, the posh part of Oxford, but I grew up on the other side. There's a car factory, which originally was a Rover car factory. Now there's a mini car factory. So lots of immigrants moved to that part of Oxford. So you had a cluster of people there. So my parents had moved there. There was a community, people from Asian backgrounds, Afro-Caribbean backgrounds. So I grew up in that. And in that environment, you don't have a great sense of anything really in terms of these higher professions, subjects and so on. But the one thing my parents did have is maths. Maths is very important. So from a very young age, it was ingrained in my mind, and my siblings as well, that you have to be good at maths. And so studying maths was very, very important. So So I was, as it happened, naturally very good at maths. And so I was very mathematical and I
Mhm.
was doing very well in maths. So I was inclined that way, which in some ways is a doorway into economics, as economics has a mathematical component to it. But the thing that really got me into economics was my economics teacher,
Oh, cool.
a chap called Mr. Drake, Anthony Drake, Tony Drake. He was an amazing teacher. And just like I was saying about in your work, having a good mentor, when you have a good teacher who's a mentor too, that makes a big difference. Like he really took me on
Mm.
as somebody to kind of look after, to help me sort of grow into the subject, encouraged me a lot to study around the subject and everything, and that sparked this sort of passion in economics that I had. What I liked about economics was you use some maths in there, but it was
Mhm.
applied. I did like maths in an abstract sense,
Yeah.
or pure maths. I wanted to apply it.
Yeah. Yeah.
And economics seem to be about the biggest issues of the world. How do economies grow? How do people get rich or poor? Or how do you allocate resources? It's a fascinating subject. And so it really comes down to Mr. Drake.
I guess we've all got to thank Mr. Drake then.
Yeah, yeah, yeah.
No, sounds great. Thanks, Bill.